Hi traders. So things seem to be calming down a bit after war in Iran kicks off. And the main point of the video is to highlight that I think we're now going to be seeing a bit of a choppy phase for the dollar index, and that should see some disconnect between the FX majors. Up until now, you've seen pretty much one directional trade for or against dollar strength. Now you need to be a little bit more selective in what you're looking at. So we'll look at dollar yen, why I think range trading strategies are the way forward over the near term, and why dollar Swiss might be the preferred short if you're looking at dollar bearish setups. Now on the daily chart here, we've got this obviously nice uptrend overall, and it's come into this sideways movement. I don't actually know whether this is going to be a topping pattern, which ends up with a decent break to the downside, or whether this is simply part of a sideways range before momentum comes back and breaks to new highs. We don't really have to know that, because whilst this range holds, we could assume range trading strategies. Looking at the daily chart specifically, notice how every time since middle of March, there's been 3 occasions where the markets tried to come down to 158, failed on the 1st of April. Then we had these intraday false breaks beneath 158, and for whatever reason, bulls stepped back in to take it higher. So what could one do? Maybe set up an alert just above 158. If that alert triggers, check the charts. Do you like how prices are trading? Do you think that range will hold? If so, bulls could look at considering range trading from the lows back within the range. So we're not looking for heroic moves at the moment, because as I said, I'm kind of expecting choppy trade on the dollar index in general. So maybe we're just looking for maybe a move back towards 158, either the center of the range back towards the moving averages, classic mean reversion, or maybe up towards the 160 level. But in all the time that we're getting choppy trade on the dollar index, that probably favors choppy trade on dollar yen. So not a glamorous way of trading, but sometimes it's better to know the conditions and be realistic. And if you don't like that, move on to something else. That takes you on to dollar Swiss. Now, to be honest, the most bearish dollar pair at the moment is actually dollar CAD, but it's going down so cleanly that it's hard to look at on the daily chart, and probably looking at bearish continuation patterns on intraday timeframes. Dollar Swiss, however, is a little bit different, because it doesn't look, it's got little pullbacks on it, which is what I like. We had a top on the 31st of March, which coincides with the dollar index top, and a nice trend has now emerged. And I like that we've got this bearish engulfing candle within the trend, cases beneath those moving averages, and we've had a pullback towards them, but it's not really tested them properly. Potentially got a swing high here on the 16th of April, sitting between this swing low and the December low. So maybe we've already seen the swing high. Looks like the market's trying to retrace within yesterday's range. If it does, great. Bears could look at fading within yesterday's range with the bearish bias, whilst prices remain above December low. And immediate support is obviously the S1 and maybe this 7780.48 swing low. And if we get a break beneath that, that would assume we've got a broader US dollar sell-off. So do keep an eye on other FX majors as well, because correlations can return. And if we do get that sell the US dollar theme back in, which is probably going to be triggered by peace in the Middle East, if anything, then that is the cue, I think, for a much deeper sell-off for the dollar. And dollar Swiss to me looks quite pleasing to the eye for shorts. That takes me to dollar Swiss, because obviously we've been looking at the cross between the two FX majors we've just taken. This looks like almost like a stock. You don't really see this in Forex very often. It's very, very nice uptrend. We've got this lovely move to the highs, textbook little pullback, and now range expansion to the highs. It's trying to break above there. So what I'd love to see really is a pullback within yesterday's range to improve that reward risk potential. And then the assumption at this stage is for it to continue higher whilst prices remain above this swing low. This is not really a pair I'd be looking at taking shorts on generally, because it just doesn't really sell off that often. When it does, it's quite limited and it goes up anyway. So until we see a significant change in price action on the daily time frame, Swiss yen seems to be favorable to bulls overall. As always, hope that's useful. Wish you best of luck with your trading.